Jamie, what's going on?
Hello. Thanks, Scott. Hello, Jamie.
Hello, hello, hello. Hope everybody had a great long weekend. Welcome back.
Did. Went fast. Thanks for checking in on short notice. Jamie's filling in for Andy today, so he'll be helping out in the questions panel, which is, why am I muted, Alonzo? Everybody's muted. Otherwise, everybody would be speaking at the same time. It would be a giant mess. So you're welcome to type any questions you want, Alonzo, and we'll communicate through that questions panel as I was just getting to. So welcome to the afternoon series of our webinars. Get started here on the disclaimer for our sessions. Just a reminder, we're a software company. We're a software publisher and a service subscription company as well. And we are going to present some content here this afternoon, but that should not be construed as any investment advice. Just our opinions. We're going to talk about some market stuff, some possible ideas. Again, it's not market investment advice. We're not even registered to do that. So just in case anybody didn't understand that, that's why we have this slide here to make the lawyers happy. The second slide, as people file into the room here, we remind you that it's a very in-depth product, 14, 15 years now in the making, and it's got many layers, and it's not something you can learn necessarily overnight. So we make ourselves as available as possible with a lot of contact points, these afternoon webinars being one of them. But mostly the live trading room with Barry is the place where people like to hang out. And you can also get information and help and technical support on Trade Ideas because he uses it on his desktop there, and he runs a pretty tight ship, and it's a free ship. There's no ticket to get on. A lot of people pay about 70, 80 bucks a month for some of the rooms out there, and I think they're on par with certainly what Barry's giving away for free. And there's a handful of good traders in there each day, kind of leading the pack as well. So that's a great place to pull up a chair and get help at Trade Ideas. All the afternoon webinars, Monday, Tuesday, Wednesday, and Thursday, we typically have them. 2 to 5 Pacific, 5 to 6 Eastern. And on Friday, we don't have any scheduled webinars. What we have is a 3-hour support session from 11 to 2 Eastern. It's designed while the market's on, and there's no content, there's no slideshow. You just come in and ask questions, and as long as we keep the content going, there's 3 or 4 of us in there at any time, helping either type or visually demonstrate trade ideas, concepts, things you might get stuck on or might need help configuring an alert or a scan, what have you. So we have that. And at the bottom, you saw the TA University. This is during the market as well. It's 4 days, Monday through Thursday as well. And it is live. It's not recorded, even though we do have a recorded version. That comes in handy like when we have a Monday holiday, like yesterday, people can go back and look at the recorded version and get the basic gist of the first session. And then we typically do it live and have Q&A there as well. So all these things combined, we really give a lot of points of access, is what I mean to say, to help people get up to speed on this great product that I've been using since 2003, 2004. So that brings us to our theme today. Again, it's no man is better than a machine, and no machine is better than a human with a machine. It's just a reminder that whether it's this product or any other technology out there, I don't think there's really anything we're going to fully turn our back on. We're going to continue to have a human interest and interaction with AI curated data or software technology curated data, but ultimately it still does come down to the human being, and that's what Paul Tudor Jones is getting at there, that people with technology are much better than just a machine. So it's a symbiotic relationship, human and machine. So this week, September, we enter market recap. I've got some definite thoughts on the range that's building up. I have a couple thoughts on the very light and quiet day for the most part in Holly, the AI. Jamie will also chime in as Andy does, and he'll have a couple of thoughts as well. We'll go over our trade of the week, which was an amazing trigger this morning, and then it just turned into a big sourpuss, but we'll talk about that. It's still intact. And then it's time to take a look at the sector glance, and there's a golden sector in there we got to talk about. And then we'll have a few alerts we might go ahead and set to leave you with. All right, let's see. Somebody's saying something, the audio test worked, but I'm not hearing anything. Sorry, friend. I think everybody else is hearing. Otherwise, Jamie and Scott would have told me, and you're not even hearing what I'm saying. So hopefully you can work it out over there. Maybe Jamie can type back to check on the menu of audio. There's some audio selections in that tab. All right, so let's get started looking at the S&P 500 using by way of the SPY ETF and my little markup pen here. Oops, we're on a weekly. We don't want that. I was looking at something different. There we go. All right, so just to reacquaint ourselves, this orange line was the major pivot line of a lot of pivots that we've seen over the years. This is a very significant line is what I'm getting at, that orange line, pivot line. Zoom in a little closer, and the blue line has been our kind of slowly curling over and arching ever so slightly 50-day moving average, simple moving average in blue. And looking at this price action, looking at the footprints in the sand, there's really interesting pattern going on here. I had said last week that to get the bulls back in the happy camp, we need a convicting close or 2 or 3 above this pivot line, and also would take out this 50-day moving average. But I don't even know if we're going to get there, because look at how many times this 50-period moving average has held the SPY. It's not letting it hardly even trade above that level, let alone close above it. So obviously the first order then is going to be to get back above and close above this 50, and very tightly wedged right behind it is this brick wall of a pivot level. And that's going to be very important to breach as well. So that's what we're seeing up in this general area. And the reason I'm calling this a range is, for the most part, we've got this bottoming area down here, a couple of tests and close test here, but some rising bottoms coming up here in these candles. So what I'm also seeing is, on the good side, is these moving averages here are really trying to hold up the last couple of days. If we start to bleed back down below what we put in place today, we could be obviously heading back down to this, I can't draw that, to this lower end of our range. So what I'm getting at here, guys, is this range has been clearly defined, it seems, with a lot of volatility and a lot of volume as well in the mix. This is nothing to sneeze at, that volume there. So, here's the upper end of our range, and here's the lower end of our range. And we can try and, play footsie around here in the middle, but, for the most part, this is no man's land in here. So if you're playing this range, I know it's hard to do in real time, but it's really starting to show itself. If we push back up again tomorrow, maybe there's some selling that needs to be done here. Maybe some shorts need to be put on. If we bleed back down here tomorrow, maybe this is where the buyers start to step in. So it's going to depend on, what tomorrow brings, but the slightest hint of some optimism, if this little area I'm circling right there can hold for the next day or two, we might have a shot at getting back up and at least testing this very important area. All right, so that is what I'm seeing. For the most part, we got to get through this 50. It's being very, very pronounced. And then once we get through that, we've got to close above that pivot level. If we move over to the NASDAQ, we're seeing very much the same thing. All right, I don't have the pivot line drawn in there. It's not quite as pronounced, but the 50-day moving average is just every single one of these lines has been a test and a failure of the price action to get back above that flattening and starting to roll over now 50-period moving average. So all the quant funds out there and all the mathematicians, there's obviously the 50-day moving average is showing up in the quant funds decision process, the technology that's out there that other people are using. People talk about technical analysis, why it works or why it doesn't. The reason it works is because everybody's looking at it. In this case now, they're programming it into their quant funds as well for market making or for whatnot, just trying to squeeze out a day and a half possibly of some profits. But same story over here. We've got to get a close above this 50-day moving average and build on that to start getting excited again for the bulls. And we'll see what happens there. The Dow, let's take a look at the Dow. Dow's kind of a different story. It's been riding, at least the significant area to me has been the ability to just hold this tremendous support. The The Dow Jones holding support of the 200-day moving average. I mean, that's a headline right there. You know, that's certainly something that quant funds and buyers alike are watching. When the price gets down here mid-level and the Dow components, they're becoming buyers. Interestingly enough, the 50 period did show its head there on last week, Friday. So same kind of thing, you know, to get the attention of the bulls again and scare the bears, we've got to get a nice close back above that blue line moving average. And then lastly, and what we always look at each week, is the micro caps, small caps. IWM has just been just not been happy at all. I mean, that line isn't even close to all-time highs. This is where the NASDAQ and the other respective Dow is, up here playing near these lines. And IWM, small, there's just no appetite for risk in the small cap sector. It's usually a good gauge, a good barometer of where is the appetite for risk. Is it a big appetite for risk? Are they being carefree out there with the money, or are they tightening the strings and saying, no way, I am not putting my money in these small caps, I don't trust them? Well, that's the latter. That's what we're experiencing right now based on the price action. It's just a giant mess below the key moving averages. It's below its 200-day. It's the only one of the 4 ETFs that we've just looked at that is in fact below the 200-day to start with. So that's all I have really for the market recap. We're going to look at some sectors inside these bigger indexes a little later, and there's some interesting nuggets in there that we'll pull out from. So in keeping with the formula of the flow of this webinar, we'll switch over to Holly now. And I only had kind of one observation. In my observations, I always try to keep them general in nature. I'm going to go to all trades here. Oops, let me turn that off. There we go. So these were all the trades we had today, but I wanted to point out just one thing. Let's go entry time. There we go. And look at the S&P here today. So what was interesting was the first two candles, the first 30 minutes of the day, we gapped the market down, got market gap down, and the buying stepped in, and the buying started to show up. Well, this is sorted by entry time. So this is 9:52 Eastern. The first trade of the day was a long position. 4 minutes later, we had another long position. What I'll do is actually we'll go like this. This always makes it illustrate better. Okay, so there's the AI in the first two trades of the day. Long. All of a sudden, we got some 10 o'clock data that spooked the market. Purchasing managers' numbers weren't really in line. Look at this. We get this giant safe in space just drop out of thin air. Well, all of a sudden, the next 6 to 7 minutes, we've got the AI going only short. So all of a sudden we have kind of a short bias here. We're not seeing any long spire because it's usually paying attention to the backdrop of what's going on. It's part of the piece of the puzzle that the AI does in fact follow. And then I guess the market realized, and this is a good thing, maybe the bigger picture will make a note of this, there was no follow through necessarily on this too much. Market came to its senses. The people like Sean, who are constantly running around saying it's a bull market, buy the dip, you know, they jump in and they say, I'll take that opportunity. And what happens over the next, few minutes, 45 minutes? How the AI is back in long mode again. And for the most part, for the rest of the day, it's just kind of stayed in long mode. But it was interesting. I just wanted to point out before I hand it over to Jamie to look at a few specific trades. In the bigger picture, the AI had a pretty low trade count, but I thought it was interesting. It was really following long, then shorts. That fall out of bed market data, and then as the recovery, the buyers stepped in. The AI kind of mirrored the directional bias that we were seeing in the bigger backdrop. And again, there's no real coincidence that we see that. I just wanted to sort that and kind of highlight that data so you can see that. All right, Jamie, if you want to talk anything specifically, now's a good time.
Sure, I'll just go ahead and grab it real quick, and we'll talk about there was a little bit of risk on opportunity today, but Holly only kicked out 13 signals today. So it's kind of a lackluster performance for Holly today, but not surprising considering the dynamics of today's session. So you got eyes on my screen, yes?
Yes, sir.
All right, so just like what Steve was looking at here, I've got the all trades blotter pulled up here, and I've got my blotter sorted by risk on. So what we're looking for here are just differences between what the AI booked in risk off mode versus where the things finished at. In other words, looking at the spread here between risk off and risk on. Now I've got another column in here just to kind of separate max profit. Just to clarify what max profit is, this is what the position was up the most, but in risk off mode. So I like to keep this in here just for, for reference purposes. But the first and most obvious one is definitely the BBIO right here, because look what Holly did. Profit save mode, got into the position right here, as we can see, at 31.30. And of course, these are 15-minute candles here. It got a little sideways action, not including the entry bar. What do we got here? For the next 30 minutes, we basically did nothing but kind of go sideways or just tread right around flat, down a few pennies. And this is classic. This is typically what we see when Holly decides to call one of her audibles, and the two audibles are the profit save and the reduce risk. The other three exit reasons for Holly are the time stop loss, or profit target, and then the two audibles that she can call are the profit save and the reduce risk. So more times than not, when we see this little flat, kind of consolidation area, a little sideways action, that is when she's more likely to pull the plug early on a profit save or reduce risk. And that is exactly what happened in the BBIO. Got a little sideways action, and you can see here area corresponding with when she pulled the plug, remind I'd rather flat it than, be down 25 cents 10 minutes from now. Sometimes that's the case, sometimes it's not. But Holly pulls the plug and flats the trade. When we can see what the stock continued to do after she pulled the plug, it almost stopped us out. And of course, with the market, pulling these little shenanigans here, hindsight's always 20/20. But the bottom line is that's what the hard stop is in place for. If we're wrong on the trade, this is what we're going to endure as a loss. Never happened, all right? Regardless of the market coming down. About 30 minutes later, boom, 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 gets back up above that 10-period moving average, which it was just hovering right above. Got a little close here. So whether, staying in this one, sticking with the hard stop, it worked. If we got panicky, like Holly, got out, well, we flatted and left that money on the table. But the bottom line is this: big difference between 0 and 97 cents. So any part of this spread that we could collect, whether it's 20 cents, 30 cents, 40 cents, that's certainly a lot better than a 0, right? Just sticking with our hard stop here. Now, not the best opportunity. I still feel compelled to point this out. When we see how wasn't just lighting the world on fire as far as volume goes today, finished a little bit above average, about 13% above, according to relative volume. But once we see it stabilize here, almost get the stop, get the green bar following the near stop out, my eyes are drawn to this little area that was broken here. And clearly this is where most of the move in this position came from after the S&P kind of shored up. Everybody realized that, well, the bottom's not falling out today. We just had that little reaction, as Steve mentioned earlier, from the what was the PMI or whatever. In any case, this would have been a great time to add to the position as this range break is coming into play here, and we could have leveraged the position for what turned out to be the largest move of the day. So, excuse me, that's the most obvious one, the most glaring, a 97-cent spread between risk off and risk on. And as you can see here, spreads start to diminish here. What do we have? About 15 cents in the YEXT. Holly calling it right here. And probably not a bad exit on this one, because if you didn't get out with her, you would have had to endure all the way back down to almost the flat. But having said that, this would have been a great one to go, you know what? I'm going to peel out a half with Holly, and I'm going to give the other half a break-even stop. That would have kept us in, barely, but it would have kept us in nonetheless. So, another 15 cents on the table. Not a huge reward there, but a reward nonetheless, to the tune of 15 cents. And let's see, let's just do one more. We won't bother with PTGX, a little 18-cent gap there, but this one is the next biggest one on the table. We got 27 cents here between -2 and 25, and this one just happened to be short sell. All right, a short and bun. This chart looking a little bit more volatile than the other ones that we just looked at here, but not a bad entry signal here. Once again, why did Holly get out for a 2-cent loser? Profit save, one of those audibles coming into play here. So, not the best movement, in the money, back up to the flat line. Holly decides to pull the plug, gives up and goes, well, in the money, out of the money, sideways action here as well. Plug out for her 2-cent loser, only to see one more little push, but not getting anywhere near close our hard stop, which is way up here at 56.16 before finally rolling over. But really, you had to sit in this one pretty much most of the day to even attempt to get any part of this action right here. So keep in mind, risk on is showing us right here at the close, but this is a good time to reference the max profit. At this point in time, actually, once again, max profit is only in risk off mode, so it's not even calculating the distance to here. So 54.87, where our entry was 55.73, not quite a point, somewhere right around 90 cents was max potential in this trade had we decided to go risk on and hold the position for more than what Holly took. So even though we can't see the big number here, a lot of opportunity in that short sell of fun. And that's really about it for the risk off and risk on spread today. Kind of a thin blotter, not a whole lot of conducive action. Right. I will point one thing out before I hand it back over, Steve. Have been tracking the prior 2 days of Holly plays, and just felt compelled to pop this one into the mix. Usually waiting about 10 minutes to check out the action of the prior Holly positions, collecting all the ones from the prior 2 days and taking the ones that finished flat or profitable in risk on mode. And just this O was beautiful today. We can see the first tick right here coming through my Holly longs from the past 2 days, waiting 10 minutes before interacting with any of these guys. So that was the first one after that 10-minute mark, since the market opens at 8:30 here where I am. And boy, that's a beautiful little signal right there at 74.05 on O. And that thing just did the upside march all day. Nice little opportunity up here to add to the position. So we had about 2 or 3 of these guys triggered today, and I think all of them worked with the exception of maybe LGIH. Yeah, there was a little profit in that one as well. Let's see, I think LCI was the one that got up, but if you didn't take the cookies, once you got profitable with some proper risk management, you could have limited this one to a break even. And then we had a couple of shorts pop out as well to the tune, let's see, CD&A, and these guys didn't fire till a good while after the open, about 30 minutes in. But CD&A and ZAG, nice downside momentum all day. So watching the Holly priors continues to be a very interesting thing to do, and I would encourage everybody out there to do the same thing as well. So that's about all the Holly input I got for today.
Well, it's interesting as you were talking. You bring the presenter back to me.
Sure.
Hold that thought there on that chart in O, right?
Yeah.
Interesting, because this is going to dovetail pretty interesting. So this was identified by Holly as a strong chart, as identified by Jamie. Made a mental note, may have slipped it into a watch list or whatever. I want to call your attention to, what's this O? Realty Income Corp. Realty Estates Trust. Okay, well, interesting. Let's just make a mental note of that, because we'll come back to that. There's a reason that chart looks good, is what I'm getting at. All right, next up, before I continue that thought on O, beautiful chart, as Jamie pointed out, found by Holly and curated by Holly and monitored by the trader. As Wally did point out, we had an interesting trade of the week today. We're back on that. By the way, that O chart was a weekly. I'll come back to that. Back to our daily chart. And let's just zoom in a little bit more. And there we go. So this is what we had to work with going into the long 3-day weekend. Now, honestly, there's really no scan. There's no golden pot at the end of the rainbow scan that this thing spit out. It's just a matter of Andy, myself, and Jamie, and whoever talking, saying, boy, Twitter's really holding up here. This market's getting crazy. This thing doesn't want to sell off. Look at it. It just keeps fighting this moving average line. It doesn't want to get below it. Interesting. So this is what it looked like on Friday. So looking what the SPY looked like on that day. It's not going to be that day. We'll go back to Twitter. Nonetheless, my point was it was a very volatile market, and Twitter looks nothing like what the general backdrop was. So the thought being, and as the email says, pay attention to what's happening in the bigger backdrop, and this thing could go. Well, first item of interest, let's just pop into the intraday chart here. First item of interest was the market, evidenced by spiders, were gapping down a decent little amount here. And I thought, well, geez, no way is Twitter going to fire with the market gapping down like that. But Twitter had a very tiny gap, and right from the get-go, I mean, I could go to probably a 5-minute time frame here, and we could even look at something. This thing opened and just took off like a rocket and triggered immediately. Matter of fact, it triggered so quickly, I didn't even catch it triggering. Which brings me to the next point. Like Waleed said, this could have been a very interesting day trade if you're on point and you bought it right on the open. But if you're a swing trader and you were looking for longer term, all of a sudden it became very frustrating. Another interesting point in time was the fact that, yes, I missed the first push. And let me actually rewind here to show you what I was seeing. Then I saw this. Let's see, our trigger was basically around 75. Let me draw that trigger in. So, and back to the point of the trigger. We didn't want to wait. If I move it up here, this would have been waiting for, confirmation way up here. Well, I don't like those. When I have these wedges like this, I like to go back just a couple of days, with the thought being that if we can clear these last 2 days, it's a nice running, rolling head start into these prior highs. So that was the reason for the trigger being down here so low. So it triggered quickly, and I missed it. But looking around through my watch list, I pulled the chart back up and said, well, hey, look at this. It just pulled right back to the entry point and started to bounce back. I said, I'll take it right here. So I took it and the secondary entry. But still, being as a swing trade, that won't work if I zoom out. Being as a swing trade, the rest of the day was extremely disappointing. So this just goes to show you sometimes, if I zoom out a little bit more, there is that upper orange line right there. Jamie used to trade in a time when I did, when it was human being versus human being pushing a button on 2 desks somewhere. No algorithms in between. There was no desire to be the fastest execution order. It was a human being pushing a button. The markets traded differently back then. And one of the main things I've noticed about the way the markets have changed in the last 10 years is they just seem to have a penchant for, if they're not going to follow through, they're going to punish you severely. And so the price action took through, brought in a bunch of new interested parties, and then almost as in a collusion type of collective fashion, like you see those swallows or those certain types of birds that fly in a giant flock, and the flock has a mind of turn on a dime, and it's just this constant morphing thing. That's the visual that I have of the algorithms that run this market. And so the flock of bird algorithms got above here, and they abruptly changed direction. And when they change direction, they do it ruthlessly. They take out a lot of levels. So once this level held, it basically told me this was, the momentum was done. Once this level did not hold, once this level broke, in other words, you've heard me talk a lot about this moving average. I love to trust this moving average. Momentum was on and the stock was going to move higher, it would have moved off of that moving average where I got the secondary entry. So again, there's another little kind of a teachable moment. There might have been some people that missed, like I did, the first push, but then you watch it and sometimes you get a second chance. Well, this second chance could have gone either way. I'd do it every time because it is still a swing trade. But once the moving average broke, it was pretty vicious. So back to the bigger picture, as we're discussing the plan of this trade, since it didn't follow through, it gave us a nasty middle finger there. And again, it's just, in my opinion, it's just the vicious nature of the algorithms. They like to run down, an alleyway and throw as many elbows as possible and take out as many people and create as much noise and havoc. tomorrow this thing could be right back up, to the high end again today. And it's like, why did we even have to go through that drill? But we do, and that's the nature of the markets that we have. Additionally, the volume was incredible. That's another reason I trusted a secondary entry in this one myself. The relative volumes were off the charts. The percentages were off the charts. You can see the volume spikes here. There was some interest. Something was going on. And then the algorithms, the market making algorithms, they just smashed it. All right, so bigger picture, I said we don't want to see this thing close below the 20-day moving average. Well, where did this thing bounce today? Wouldn't you know it? The old programmable if then bounce 20-day moving average by, so these, let me go back to my cursor here. There we go. You see the bottom of that wick bouncing perfectly off the 20-day moving average. And then intraday, you always get this fun little happy action too. A big push down and then a quick reversal. When you see those quick reversals on a 15-minute chart like that guy right there that correspond to a very significant point on the daily chart, well, those can be really interesting entries if you're on your point and on your game, because you're looking at the bigger picture and you're noticing that little tick intraday, sometimes that last little death knell that washes out the last people, and you'll see it never really went below that level again. So I think tomorrow this thing just might have a reversion to the mean and bounce back up into the range. But the point being is that we talked about the downside risk being not to let a price action close, and that's a close below the 20. Because what if this came down and traded 10 cents below the 20, and the first thing you're doing is you're seeing, you're looking over and you're logging in and you're getting out, and by the time you realize you're out, it's bounced and back up, off of that level. So this is why we don't let these bounces off that level get us out. We're looking for a close below, like something like this back here, even though it was a head fake. Now that would have scared me if I was trying to stay long back there, but then it regathered, reset, was just had that look. The problem is the algorithms, or for whatever reason, the giant seller jumped in, who knows, but the price action is the way it is. And this is a pretty wicked reversal. If you're somebody that just likes to catch opening ranges and take the cookies as they come to you and not wait for a few more to come down the tray, then you were happy. You could have gone in and had a nice move. So a lot of different ways in which this thing played out today. But at the bigger picture, it's a swing trade idea, and it has not broken our level of support. So a lot of elbows being thrown, but it's still in play. We'll see what tomorrow brings and base our decision based on tomorrow's candle. All right, so I think we're caught up on that. That's the trade of the week. It was just kind of something we were watching. Again, it didn't come from any specific scan. It was just human beings watching, making note of what was holding up relatively well to the rest of the market. All right, so now I want to go through, it's a good time when we have these corrections and range bounds to try and see what's sticking out as an anomaly as far as a sector. Well, I think we know that silver and gold's been doing really well, and quite honestly, I read a good blog from JC Pretz last night, and he showed a long-term chart. We might be running a little bit out of steam in silver on the bigger picture. If I go to a weekly, I'll go to a monthly, so you can really see it. Again, this is the ETF, but I see a big prior pivot level, a lot of support back here at these levels, back here, little resistance there, briefly got through, but we're slamming right back into that big level here. So I think what I'm getting at is I think silver and gold might be due for a little bit of a pullback. I've been bullish on them for a while, but we're starting to get a little parabolic here. The price is extremely separating from the fanned out moving averages. So, I mean, if people have been riding this for a while, this is the kind of area where we start to take a little profit, but still in the bigger picture, probably due for a pullback and a reset. So that's the sector that's been leading the way. It's been taking a lot of the headlines and getting a lot of attention. But I went through the sectors. There's silver at the top again today, and there's natural gas, okay? I want to take a look at a couple things. Obviously, the gold miners have been doing as well also. They're in a kind of a consolidation mode. All right, so now we're getting into, this is something really interesting here, so I'm going to bring it all the way back, Jamie. O is a member of the REITs. IYR is the REIT ETF. What happens if I go to a monthly chart of the REIT? Holy shit, we're at all-time freaking highs in this thing. Has anybody been noticing this or talking about this? So this is interesting. And if you think about it, it makes sense. Going, Germany's in negative interest rate territory. Trump screaming at the Fed to lower rates even more. People think lower rates are coming. Where's the money going to go to chase yield and to clip coupons? It's going to go to a REIT, something that might generate 5 to 7% annually as a dividend. And so there's a lot of interest in the REITs right now, just like there was, money piling into treasuries. These REITs have been silently creeping up to new highs. So let's go back to daily. I'm ringing an alarm bell. If there's something you're watching, so wouldn't it have been nice to know, Jamie, this information going into today, knowing that the REITs have just been killing it, and you saw Holly single stock window, and it's all starting to come together now. So these are the kind of things you need to do in your homework, is kind of understand who's got the baton and who's looking tired and who's looking strong. IYR is looking extremely strong. They're at all-time friggin' highs here. Okay, mental note 1, REITs are strong. As I go through a lot of this other stuff, there's the treasuries, they're consolidating. Energy looks terrible. Healthcare is a mess. There's our spiders. There's one in here that looks really bad, and we're going to focus on that too, because it's not just in the middle of a mess. It's showing its hand. It's not the financials. It's not the airlines. Oil sector is kind of interesting. I could make a case. As a matter of fact, I was going to make a case. Look at how the trade ideas chart line here. It's drawing a blue line. That blue line is exactly where I would draw a price alert, create a price alert for a possible reversal in the OIHs. I'm not saying it's going to happen, but it's looking like it could set up and possibly happen. So you don't even have to, the line is right there for you. Trade ideas identifies the pivot point in which I would say, yeah, you know what? Instead of a price alert, I draw that. But if that was a price alert, I'll know if the OIHs break. And then that day, maybe it's Thursday or Friday, all of a sudden, I'm going to start paying attention to oil drills and oil service companies. So I'm reminding people here in trading, stay familiar with where the hot sectors are. And they might only stay hot for a day or 2 or 3 and then give the baton to somebody else. But it's good to know in the bigger picture when you drill down, oh yeah, that chart looks beautiful. Holy shit, that's a chart that's a derivative of that bigger sector that looks really good. Well, now I've got more information as a human discretionary decision, and it's kind of lining up. So OIHs and whatever, but what I'm interested in talking about, I'm just going to go right down to it here. We've done IWM, is this guy, tech. And of course, we've heard a lot about, drug prices probably coming back in for helping the consumer. But the price action of the biotech index is actually uglier than the IWM. It's below the 200, below the 50, below the 20, below the 10. Bounced up into the 10 and 20 last week. Couldn't go anywhere and just took out some key recent levels here. It's probably on its way to take out some key levels down here. So if you're long biotech, you need to ask yourself, do I want to stick around if this thing goes much lower? Because the bigger picture is looking really ugly over there in biotech land. And then I had one more sector that I thought was kind of interesting. It might have just been that, yeah, that was it. The OIH, possible building a base. IYR is on fire. And the IBB, the biotechs look horrible. And silver looks a little tired. So that's kind of my big takeaway right now when it comes to these individual sectors. So we will move on. I did set some price alerts last week. I'm not even going to go through them because they were all so horrible. A lot of them triggered and went crazy in the opposite direction. And, this backdrop of this volatility is not really surprising to see that. So not even going to go through those. Nothing really to write home about back then, but I do have about 8 or 9 this week that we can mark up and take a look at. So first, my go-to A table here was a little thin. I normally have it cut off right there at the 10% short the float, and I don't have that many in there. So I opened it up and went down to an 8% minimum of short float buyers and found a couple of extra ones in here. I'm going to stop on this one. I'm not going to call it out, but DLR, that's a dang good looking chart. Guess what sector that's in? Digital Realty Trust. So there's another good looking chart. This is why that sector is looking so good. And this is why you got to have a single stock window. I forgot what DLR is. I click on it and I look up and I see the word realty in it. Now all of a sudden right now, that's a hot sector. That might be some good information we want to know. But I don't see a setup on this one. If you want to mark it up, I'll tell you it could have some follow through tomorrow. I'm not going to make it official. This thing very well could have some follow through for tomorrow, maybe just a couple of hours. And then it's my theory that around lunchtime, a day and a half, today being day one, tomorrow will be a half a day into lunchtime, the short profit takers that want to book some profits start selling. And that's when you get a bit of a pullback. All right, so the ones I'm going to list, starting with the first one, I don't remember where I got it, but ATVI, I don't know why, it's just interesting to me. It's gapped up and it's holding this gap up level. And this one we're going to get a little tricky with. There's no real setup here. Look at all the space between here and the moving average. And you know that I like and I believe that the market making algos, suffer from their own form of ADD in the programming they have to follow. I don't think this thing can move higher until it comes back and kisses and says, tag, you're it, to this 10-period moving average. So why don't we try something a little different this time? Why don't we anticipate that? We'll come up here just below that low and maybe somewhere right around there. And as that new moving average draws tomorrow, it might be right around this vicinity. So we're going to call this a pullback entry. We've got to change it from long to short to long. I just did that pullback entry on the 10 SMA question mark. It could be a perfect jump rope timed entry, as I call it, because I feel like the bigger picture says this chart wants to go, but it's not going to go until these OCD algorithms pull back and kiss that 10 period. Then they have, then the algos shift. Okay, target achieved, if then, reverse, buy, however the hell those things talk. I think that's an interesting setup. Let's make sure I've only got that one in there, because I'll give these out here in a second. All right, ATVI is the only one. One down here from the washout bounce, only two came through EXP. I don't like the downtrend of that. Pass, but this SUM, this is an uptrend. And look, it did exactly what we talked about. It doesn't want to move higher until it ran down and ran all the stops out today, filled the gap, pushed down through, almost hit the 20, but did reversed very strongly. I think this thing's got a green light to go now. And so I'm going to say, I'm going to put it above right there. I'm going to use the 15-minute chart as my entry, look for kind of a pivot level. We're going to call it right there. This thing should have short float 6, and the score is an 84 on the score proprietary filter that we use. So a decent stock, much better than the other one. So that one came from the washout bounce. All right, and go one more before I go to the big list. Only one short this week. I'm not going to pull it up, but it's that bounce up into the 50s. So we're trying to time. We did a few of these last week and they didn't work that well. But we might as well have ATVR, Steve. We might as well have at least one short in here that's a fade. Is it 8? Oh my gosh, I can't even find it now. Yes, it's this one, dyslexic. A VTR. So 50 period in play. Look at how this one's getting bashed in the head every time it tries to get above its 50. And it had a good running start today on the open and couldn't do it. This thing's still kind of in a moderate downtrend. Just for fun, we're going to go ahead and do a follow through short here. So if it follows through that price, it'll be short and we'll leave it short. The other one was OIH. I did want to set that as an alert, so let's just do it. The OIHs will come in here and we'll set a bunch higher, way up here, right about there. It's a sector play. You could probably even do some ETFs that might even move faster if you wanted to, but that could be an interesting reversal. I'm going to add to the notes on that one because it feels like it's building a base. Sector play. Edit. Could be building base. Trigger confirms. All right, so now we can move on to the A table. Gotten tricky with a couple of those entries. Let's see what we've got here. Actually, I've got one more. This is another example of a decent looking stock. It's got a 90 score. It's got only 5% short float, so not that big there, but look at what it did here. It didn't want to go higher until it wiped out 1, 2, 3, about 4 days lows right there. So it was gunning, that friggin' algo was gunning for this level down here. And what I'm trying to do more of, maybe even trying to teach people to flip their heads around and look at these as entries. If you remember, the regulars who show up here saw that a couple weeks ago, I did in fact take this alert, which looks for these jam downs on the open, which correspond to a decent trend on the daily, and try and use these for really tricky, well-timed entries for a day or two. And it back tests rather well. I haven't back tested it recently, maybe next week. We'll see how this volatility worked out. But look at the arrow. Arrow is signaling the entry point. There was a little bit of pain after, but boom, it bounced right off that level. So I think the coast could be clear on this one, and we will basically just draw a new high on today's candle. Once you see this, there might be a day or two of follow through. So we'll go to 66 as the trigger. All right, so now lastly, the remaining ones are going to be on this A table. We've got AJRD, the one at the top. It's got the most short float, still 25% of the people short stock with a 92 score. This thing's looking pretty good, and I'm just going to use, again, it didn't touch that moving average, but it did fill the gap, and it might be close enough. So if it takes out today's high, 57.28, we'll call that the entry. All right, now we're going down the line here. Let's see, we did have MTZ also, rather high short float, still at 19. This one did exactly what we want. Look at that, got ahead of itself, day and a half, pulled back, filled the gap, kissed the moving average perfectly. Look at that drive down in the morning. This is usually when these happen, the first hour, 45 minutes of the day. Boom, the big push down, and that's the big reversal. And after that 15-minute candle hammer, we never really had much pain beyond that level. So again, this one would be a high of today's candle for possible follow through. 69 is the trigger. And a couple more, and we'll share these out. We did MTZ, we're gonna do AJRD, I did that one. AYX, we're going to use this one as well. This one's it's kind of flagging more than anything. It's really riding those moving averages, but I'm just kind of liking that look right there. So on this one, we'll look for this new high above that red candle there, which is going to be 144.79. And then lastly, this is when I opened it up. Down here, I went from 10% short float to 8% minimum, and I got all these new ones that came in. I discovered that real estate one, DLR, could be some follow through tomorrow, but it's not an official markup. But then I also discovered this ARE. I thought that was kind of interesting. Ideally, maybe this one goes down and tags that moving average, and then it seems to be a pretty decent level right here. I'm going to use, since it's so close, I'm just going to use the high there for follow through. So 150.62. And again, that just popped in because I loosened up the filter a little bit on the short floats to try and bring in some better looking charts, but not really get so focused on the short float like I do up at the top here. So that is the ones that I've set for today. I think there's about 10 of them or 8 of them, 9 of them, 1, 2, 3, 4, 5, 6, 7, 8, 9 exactly. I'm going to copy and paste these, copy and drop these and share them into the chat window like I usually do. And maybe these will go off and maybe they'll give some good ideas for you guys in real time. So share, copy, and I'll drop them in the chat. We'll call these price alerts, and we'll bring Scott in to talk about any announcements that we have on the way out. And there you go, it's in the chat window. So that's all I got, guys. Scott, come on in and talk to him if you want.
Yeah, thanks. It sounds great. A couple items on the way out. Let me get the slides up. We should be resuming the weekly podcast now that the summer is over and everyone's back from vacation, either this week or next. So stay tuned for the next one by searching for Trade Ideas Podcast and whatever app you listen to yours in, and just adding the subscription. We've got a great new series of ebooks. There's 3 of them, each on a different topic, and each one has 2 chapters. You can get these by going to trade-ideas.com/setup, and both Steve and Jamie contributed chapters, so do check those out. Just go to that landing page, put in your email address, get them delivered directly to your email inbox, and you'll also get the download links as soon as you put in your email. You've got a code, new one for September, Save on Ideas, all caps. It's good this month, and it saves 15% off your first month or year of any Trade Ideas subscription or Brokerage Plus. So take advantage of that before the month expires. Also, if you're a standard subscriber and want to do an upgrade to premium, you can just use that same code on the upgrade and save also. Any questions, email us info@trade-ideas.com. That goes into our help desk software. It gets routed to our team, and you get the response quickly. You can also follow Steve on Twitter at TodayTrader. We've also got at Trade Ideas and at QuantBot. Facebook.com/TradeIdeasPro is the Facebook handle to follow and share with your friends. We're going to have the recording of this up later on tonight or tomorrow morning in case you want to watch it again or if you missed something. So stay tuned for an email tonight or tomorrow with a link. Thanks, Jamie. Thanks, Steve. Thank you all. Have a good one.
See you next time.
Yep. See you later. Bye-bye.